if you can see here, 59.70, 59.75, 59.80. That's a 5 wide butterfly. But when you think about it, it's a 10 spread. It's 10 points here. So if it finishes anywhere within the 10 points, I could make anywhere from $5 to $500 on top of the 40 I've already locked in. So I'm either going to wake up and say, well, I made 40, or I made anywhere from 45 to $540. And this is one contract. This is just quantity one. I haven't even talked about what happens if you do 2, 3, 5, 10. I'm currently doing contracts 50 and up. So my quantity is 50, but I worked my way up to 50. Some people are doing more than 50. Some people do 10 every single day. How many of these you want to do a day? So the scenario that I love to say is that this is like going to the 7-Eleven and buying a lottery ticket for the end of the day. And they give you $40 and say, good luck, sir. You can make up to $500. They give you $40 and a lottery ticket. That's what the vert is at its base. Now, this is just doing one convert and let it cash settle until the end of the day. Okay. This is pretty cool. So again, I came up with a way where I could buy a debit spread. And once it gets in them, and obviously spot what I call the shift using time of day and some rules, which I'm going to give you tonight. Very simple rules. 4, 3, 2, 1. No magic indicators, just very simple rules. And you'll be able to do this tomorrow. You can practice it tomorrow for a few days. You'll be able to do it. I'm actually going to show you one advanced strategy as well, so you don't think you're not just getting the simple basic stuff. We have a practice module, and I'm going to finish up with the actual numbers. So let's get to these first 4 things that I just want to make sure you're clear about. Buy the debit spread. Once it gets in the money, credit spread, right? So there's basically 2 trades here, right? This is trade number 1. This is trade number 2. Okay? So there's 2 trades. And by placing those 2 trades, we make a profit. Okay? Number 2 is that we lock in the profit. It's locked in. So no matter what happens after that, no matter what, I don't have to close it, right? I don't have to do anything with it. It can cash settle at the end of the day. It is locked in. No matter what happens, I made that money and it's locked. The third is that the 2 trades form a butterfly. And that butterfly has that lotto potential. Remember, this was just one contract that could lead to $500. I'm going to show you the numbers and the range of SPX next. Really cool, right? And the 4th part of it is, the final part here, is that it's a walk away. You do not have to be in front of your screens all day long. You can literally just create this trade and walk away. Why? Because it cash settles. There is no other strategy like it. So what are you going to need? Number 1, you're going to need to know the times of day and be able to spot that shift. And I'm going to show you in a second those rules. Obviously, you're going to need price action methodology. Sorry about the handwriting. Price action. I'm getting so excited. I'm going faster than my mouse can facilitate. Here we go. Price action methodology to confirm the shift, which is awesome. I'm going to show you that. And just some rules to follow to execute the trade. That's all you're going to need. Now, get the rocket ship and you'll be able to fly longer, harder, faster, be more effective. Obviously, you'll be able to do it easier. You won't have to like draw the lines of the time of day and all that kind of stuff. Okay. So I shared with you the times of day. I've shared with you the basic strategy of it, right? And so I want to show you the range here. So what's interesting to me is that the range of SPX throughout the entire day is 20 to 25 points on average. Now, if you remember the butterflies that we're doing that are multiples of 5, boom, 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 right? And then boom, 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 and boom, 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 whatever it is, right? These are tens, right? Tens, meaning there's 10 points between here and here, 10 points between here and here, 10 points between here and here. Now, I'm not a mathematician, but if the average range of SPX is 20 to 25, and these flies that we're putting on have a 10 width to them, right? Remember, 5970, 5975, 5980, like this big. What are the chances that price at the end of the day is going to land somewhere inside that net? I will tell you, it's 1 out of 3. It doesn't necessarily hit smack dab in the center, but after you do this over a period of time, the average is that 1 out of 3 will finish somewhere in the net. And that average is about $150. Now, if you pin it, it's $500. If you can pin that sucker right smack in the middle at the end of the day, it's called a pin, it's $500. Realistically, let's just call it maybe $400. Maybe you're a little off by $1 or by 80 cents. The average is $150, 1 out of 3. Pinning it is 1 out of 9, and many people have experienced even better than that. We have statistically gone back month after month after month where you would have spotted the shift, what you would have put on, and where did price end at the end of the day. And 1 out of 3 butterflies, you finish somewhere in the net because of this 20, 25 point range. And 1 out of 9, you get pretty close to the middle, which is around $400 or $500. Again, one contract. What if you had 10 of them on? What if you did, let me just draw a couple things, and then I'll get to the rules. This is the day, yeah? What if you did one here? You did one here. And you did one, let's say here. Right? 1, 2, 3. Remember, it's 10 wide. Wherever it started, wherever it ends up, if it finishes somewhere in one of your nets, sometimes it'll hit 2 of them. Didn't draw that straight, but somewhere. It hits somewhere in the net. And what if you did 10 of these, 10 of these, 10 of these, and you made $40 a piece? 400, 400, 400. You just locked in $1,200 on 3 shifts, and you know 1 out of 3 of them is going to hit, right? Well, if you hit on average $150 is the average, and you've got 10, that's $1,500 every 3 butterflies. And if 1 out of every 9, you're going to hit the center, and that's $5,000 of lotto, and that happens 1 out of every 9, that means 1 out of every 3 days, 2, 3, 4 days, you nailed this thing for $5,000. How much is that a week? You're making what? $1,500, $2,000 a day? A day? Plus a $5,000 a week kicker at minimum? And who says you only have to do 10 contracts? And who says you only have to do 3 shifts a day? There's no limit to where this can go once you understand it. But it's really important that you get the range of the SPX is such that you will hit these flies more than you can imagine. Now I'm going to share with you the rules next. Okay. Actually, before I show you the rules, let me show you this real quick here. So just in terms of the execution of the numbers, everyone's, you could do this from your phone. You could do this from Toss. You could do this on trading. You could do this on whatever platform you want. Okay. I'm just to get the indicators. You can still trade it on TOS. Go trade it on your phone, trade it on anywhere else if you want. You'll get the signal. And many of our traders that have broker platforms that they like, that they're more comfortable with, they'll trade on the other one. They'll just keep a screen open. And when they're ready to take the trade, this is how you would do it. Really simple. Let's just say this. Let's just say this is the shift, right? Let's say this is the shift that you're looking at, right? So let's just say this is where you spot the shift. I'm just making an example. You look to the right and you got to round up. If you're trading up, you round up to the nearest strike. And remember, they're in multiples of 5. Makes it really easy. Multiples of 5. So 59.75 is the next one. So if price was at 59.74.25 or 59.73.61, whatever it is, you round up 59.75. So the vertical that you buy is 59.75, 59.80. Easy. Boom, boom. On average, this will cost you somewhere between $1.80 and say $2.10. If volatility is high, it might be $2.15. If you get it more out of the money, it might be a little lower, but this is kind of the range. I would say the average is probably $2. And if that's the vertical that you got, 59.75, 59.80, as soon as price starts to move into the money a little bit, then you go put on an order to sell. You select this from your options chain. You go to the sell side and you go to 59.80, the same strike as this, and one above it, 59.85. Takes a little practice on paper, a couple times, and then boom, boom. Now this will not fill right away. You are going to have to wait until price gets up to around 59.80, 81. Sometimes it fills right at 80. Sometimes it has to go 80 and 50 cents. Sometimes it has to go to 81. So look, if I got this, just watch the numbers here. Okay, 59, let's say I got it at 59.74. And I got 59.75.80. When it gets up to 81 is only 7 points away. You only need a 7-point move to get in the money. And this, you'll most likely be able to sell for, I don't know, maybe 230 or so. Does it really matter? You end up buying for 210, sell for 230. Oh, so I only made $20. You made $20 and you have a free lottery ticket until the end of the day. And you can do another one and do another one and do another one. And when you get better at it, you don't have to just get one. You can get 3. You can get 10. You can get 50. What's 50 at $20? $1,000. What happens if you hit 50? $25,000 lotto ticket. And it's not like it happens once a year, right? So I wanted to show you just when you spot the shift. Let's look on the downside. You go this way. Oh, there's the shift. And you look over here and you see, okay, 59.80. So you get the 59.80. I'll just draw it here. 59.80, 59.75 put debit spread. I'm going to buy this one, sell this one. When it gets in the money, what do? I sell the 59.75, the same number as this, go one strike lower. This is now the credit spread. And I sell that credit spread for more than I paid for this. Now, can you just buy one for $2 and sell the other one for $2 and make no money and end up with just a free lotto? Yes. So you mean I could do like 100 of those and just have, instead of making money, just put 100 tickets all over the place? And if ever I hit, I make $50,000. I only need to hit twice a year. Yes, you could. It's insane. I suppose you could do that. Okay, time for rules, okay? I'm going to give you the rules without the indicators, okay? Here are the rules. So remember, I told you the only things that I'm showing you here are regular candles, right? Red and greens. And all I have here is the 5 and the 10 EMA moving averages, okay? The 5 is the gold one, and the 10 is the blue one. Okay? Yeah, it is mind blowing. You're right. This is the 3 and the 5. 3, 5, 5, 10. Okay? That's it. I'm not, forget about this indicator on the bottom. In fact, I'll get rid of it. Okay? I don't even want you to be looking at that one if I can. Can I? Disable, 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 disable. Okay? I don't even have the 3-2-1 squeeze, which I give you for free. Just looking at this. Okay? Really cool. So I'm going to give you the rules, and here are the rules. So the trading chart itself, let's go to just today's. Let's start off with today. You can write these rules down. I'm going to draw them here too. You could take screenshots and you'll be able to watch this video again. Okay. I'm not giving you any documentation. There's no PDFs. There's no slides. You can watch the video. You can write it down. You can take a screenshot, whatever you want to do. I'm giving it away. Okay. Actually giving it to you for nothing. Here it is. So the first rule. Okay. Remember I said it's 4, 3, 2, 1. Start counting. 4, 3, 2, 1. So number 1 is time of day. So all you need to do is when the market opens, the first time of day is 10 o'clock, right? So, you're going to be aware of it. It's like, here we are. It's 9:40. Here's that little jiggy that Michael was talking about, whatever. I'm just going to wait. I'm waiting. I'm waiting. Here it is. It's getting close. I'm just waiting. And obviously, look, if price is moving up in the morning from the open, and what I'm looking for is a shift, right? If I'm looking for a shift, what direction do you think I'm looking for the shift? If price is going up in the morning, the 10 o'clock shift is obviously I'm looking for this move, right? So the very first rule is time of day zone. And here it is. I think I'm right before it. Yeah, that's that. That's 10. So here, this is 10 o'clock right here on the circle. So it's somewhere right in here. When you get the indicators, it'll look like this. It'll be like a whole zone here, but it starts right there. So time of day critical. Let's say you open up your computer, it's 9:45, blah, blah, blah. Oh, that's right. There's a 10 o'clock shift. You wait for it. Wait to see what the rules are. So number 1 rule of 4 is time of day. Number 2 is you're going to look for wicks. So what are wicks? Typically, when you start to see wicks, it typically means that if it's going to the downside, it typically means that there is some selling, even though price was going up. As it consolidates and starts to think about shifting, then wicks start to show up to indicate to you that there's some selling going on. That's usually like one of the first things that you will see. Now, this is an unusual morning. So right at the get-go, as soon as this thing starts, there's your kind of little reversal, and it starts to head up. Okay, I'm looking for a reversal. Look at this giant wick. Look at this giant wick. You got 2 huge wicks on the way up that are giving you a warning sign. So just think about what this means, okay? This particular candle right here, I'm going to open it up really wide so you can see what wick methodology means. Okay, everybody can see that, right? If price is moving up like this, what is that? Well, I'll show you. This means that price opened here, right? Price went all the way up to here, but at the end of 3 minutes, it finished here. It's kind of a reverse, right? It went up and then reversed. That is a warning sign. Why? Well, you have buyers that have come in here and pushed it up, right? But once you had buyers push it up, you had sellers come in and push it down. So the wick is a warning that there are sellers coming into this market. Selling pressure, yes. And you look again, this wick, this is interesting. This wick opened here. I know because it's solid, right? Price came all the way up to here, but look where it finished, down here. So just these two candles in the morning as the markets open and we start moving in towards 10 o'clock. The first, and sometimes it happens right before 10. This is just the way it happened. I want you to look at what these two candles look like. I'm going to draw them so you can see. And then I'm going to show you where price started and finished. Price opened here, went up to here, but closed down here. It went like this. Price opened here. It went all the way up to here, and it closed here. Now, momentum is keeping this thing alive. But as I see, rule number 2 is I'm looking for wicks. Sometimes they happen right here. Sometimes they happen, look, right here, right here. We definitely have wicks before and right after the shift. So that's warning number 1, time of day and wicks in the reverse. Let me just show you the 5-minute chart for a second for the 1 o'clock reversal real quick. You see how price is coming down, coming down, coming down, coming down, coming down. Wick, right? And you see also this giant wick and another wick as price reverses. Do you all see wick, wick, wick? So these are the buying wicks that are happening as price is coming down. So time of day zone, check. Wicks happening, check. You just watch them happen. It doesn't mean you take the trade. I'm just giving you the first 4. Remember 4, 3, 2, 1? So first, time of day coming? Yes. Wicks starting to happen on my trading chart? Yes and yes. The third one is what I call triangles. Now, this isn't exactly a triangle. It's more of a triangle here on this particular one. Look at this. You see this? That's a triangle, isn't it? This is not, I don't know what this is. This is not really a triangle. This was just kind of a weird piece of price action. But what I'm looking for is a gap. And I'm calling it a triangle because it usually is. What I'm referring to is right before the shift. What typically happens is there's a last gasp buy on the short-term time frame, just a little bit. And because I'm using the 3-period moving average, which is a very quick one, it moves and pulls up faster than the 5-minute can catch up. Because remember, these are 3-minute candles. So the 3-minute candle, and the 3-minute moving average move pretty much together. But the 5 here, and the 3-minute candles don't work together. It's more broader. It's slower. So what happens is right before it's going to shift, you get this last little gasp to the upside, and it stretches this moving average up. This other moving average does not stretch as quick. And so you end up with this. Typically, it's a triangle. You notice it here. See this last gasp for selling? It's happening. It's happening. It's like one more. Why? These are the ones that are either getting out of the trade. These are the ones that are possibly right before they take profits. This could be by the FOMO traders that are coming in at the last second. It could be a number of different things. It just stretches one more move to the downside. Before the reversal, look at the triangle. Look at this beautiful, see that thing? Look how the moving average, now this is the 5 and the 10. So the 5-period moving average on the 5-minute chart moves in concert with the candle. But the 10 is the lagger. And this is the reason why I've got the 5 on the 5, the 3 on the 3, because it moves. Look, I mean, here, let me just show you this. These are 5-minute candles. Look at the 5-period moving average. It's literally on top of the candles, yes? Right? Like, what's the point of having a 5-period moving average on a 5-minute candle? Absolutely nothing. It is useless unless you put a 10 or something greater than 5 right next to it so that when you see separation between the two, you know it's going to snap back, right? Look at this. Look at the next shift. See the separation? Look at this. See that separation? As it gets stretched, it separates before it comes down. Look at this. Stretch before it comes down. Triangle. So the third thing that I look for, first, time of day. Second, looking for wicks. And the third, on my trading chart here, I'm looking for that separation, what I'm referring to as the triangle. And look, I'm in real time here. Boom, 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 boom. I'm like, oh, you know what? I see the wicks. I see wicks. I see this. Okay. That's number 3. Really cool. Number 4 is the moving average cross. So as I watch, look, wick, separation, and look at the moving averages. They get close, and look at this. Bang, right there. Does everybody see? Can you see where they are crossing here? Right there. Pretty clear, yes? Do I need to make these thicker so you can see better? I can do that. Can you see it now? Look at this. Do you see it? Right there? Moving average, cross. And what happens? Straight down. And it goes down even further. So, number 1, I look for wicks. Number 2, I look for the stretch out. Hopefully there's a triangle here. Yes, right? I got the time of day. And number 4, wait for those moving averages to cross. Boom. Now, do we take the trade here? Not yet. Remember, it's 4, 3, 2, 1. So I've got my setup here. I got my time of day. I got the cross. I got everything just kind of ready to go, right? So the 3 is what I'm going to look at on this 5-minute anchor chart. Now, this is the SPY. Okay, this is the SPY chart. So what I want to do on the SPY here is I want to figure out when the market opened, where was the pre-market high? So if I look here, you can draw these lines on your own or you'll have the indicators, right? So the pre-market high is right here. The pre-market low is right here. So these are levels, and you're going to want to carry these levels throughout the day. You can draw them using any drawing tool. Absolutely could. And it's good to have these levels because you want to make sure that price doesn't run up into them, or down into them. So the 3 on the 4, 3, 2, 1. 1 is you want to see the moving average cross of the 10 and the 5. That really confirms the move. So if you look right here, I know I got it here, but you know what? This is a 3-minute chart, and this can be waffly, and what if it goes back up, right? But when you get a moving average cross right there, right at 10 o'clock, look at this time. Look at the time here. Can anybody see? What time does that say? That's the moving average cross. Can you see the time? 10 a.m. Look at this. 10:05. So 5 minutes later was when we really got confirmation. So we waited until we got confirmation on the 5 minute. So 4, 3, 2, 1. This is number 1 on the 5-minute chart. Is I want to see the moving averages cross. If I'm trading it to the downside, I want to see them cross negative. That's number 1. Number 2, I want to check my levels on the SPY to see if we're going to break through some level. So certainly, here's the pre-market low. Here is the pre-market high. You've got yesterday's close, which is just about right here too. And you have today's open, which is about here. It just happened to be that they're all stacked together. You can draw these lines, or you'll see when I show you in a minute the actual indicators. You can see how they populate. So I want to look at levels to make sure I'm not running into any levels. So as price is here, can you see that I have a clear runway from here to here? If the pre-market level was here, I would say, let's wait till we get through because it might bounce and go that way. So I'm just confirming that I've got a pre-market level here, but plenty of room for this trade. plenty of room. Okay. So number one, moving average cross. Number two, I want to check levels. And the third and final is structure. I want to see structure.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.